In this episode, we discuss a number of really cool trading concepts such as progressive exposure, staying out power, weakest hand, and risk first. I want to make sure to give proper credit to where it's due. These concepts were created by Mark Minervini. I neglected to mention this during the original recording. You can learn more about these important trading concepts from Mark's books, his Master Trading Program seminar, and his Minervini private access. Okay, hello everybody, and welcome to Investing with IBD, sponsored by Vantage Point. Today is December 2nd, 2020. I'm your host, Arusha Pierce, and today we have Leif Soreide on the show. Leif is the founder of Champion Team Trading and was the U.S. investing champion of 2019. Thanks for being here, Leif.
That's right. Thanks so much for having me. It's a big honor. It's a lot of fun coming on here. Talked to you a little while ago about this, and it's kind of funny how on this show, I didn't ask for the interview. What I actually did was I emailed support. I said, maybe we'll put some more charts together on markets, but I had some ideas, and Rusha wrote me back and says, how about an interview? So you guys want an interview on IBD? Email support. That's the way to do it. I'm just kidding. No, seriously, it's a big honor to be here. I'm a big fan, and a lot of my members, you jumped in the platform, which we appreciate. There must have been 100 guys, guys and girls that wrote you in and said, they're big supporters of yours, and they're super excited you just dropped in. So thanks for doing that. We appreciate that.
No, it was great. Yeah, I was. It was great. So on today's podcast, we are going to talk about current markets. We're going to talk about the importance of being a risk-first trader, and then we will end the episode with a few current ideas. Let's get into the current markets. The market is in a confirmed uptrend. We don't have any distribution days on the NASDAQ, but 3 on the S&P 500. Leif, what are your thoughts on this market?
Yeah, so the IBD 50, I look at those leaders, look how they're acting.
Yep.
And I kind of make a note of how many are over the 50-day moving average. My members will see me do this. And I think yesterday it was 44 of the 50 were over the 50-day moving average. So we're definitely trending, but we're having some chop. So all I care about is getting the money through the pivots and getting the money to stick in the trend. Mm-hmm. And if we have a chop fest like we're having this week, we take a look, dial things back, and I'm all about progressive exposure. Like we're not 100% invested right here, because it is a little difficult, despite what you see. How that looks like. I mean, the NASDAQ is this is like a cup and handle type of breakout almost right there.
Yep.
So if that was a stock, you're doing well. So
yep.
But the leaders are kind of extended, so they're a little bit wedged up. And when things get wedged up, they have a lot of flushes. So we like to buy tight action coming out of bases, and very O'Neill style. I look for the fastest movers and kind of known for that. So.
Okay. So yeah, I agree with you. The market is a little bit choppy right now. So you definitely want to make sure you are managing your risk and being a little bit more careful, because things have been working so well that we could have one of those out of the blue kind of sell-offs here. Leif, so let's go into your background. How did you get into investing? What really inspired you to really start going through the learning curve and the path to become a champion trader?
Yeah, I'm more of an entrepreneur. I've always been a business person, so I thought I could kind of pick stocks.
Yeah.
Early. So in the 90s, I was picking stocks and acting on tips and doing a lot of stuff that didn't make sense. So before I had a lot of systems taught to me, and I paid a lot of great traders to teach me their systems and stuff. And eventually, trading in high school, I think in 97, I got caught in Manhattan Bagel for some reason. I got a bankruptcy. So it was a couple $1,000s, which is all the little money I had at the time. And that was gone. So.
But that was a really valuable lesson for
you
to learn at that point. And it was a lesson that you didn't really have to, even though 2000 was a lot of money back then, and it is still a lot of money, it is still a little, it's not that much tuition that you're paying to the market over your lifetime.
No, you learn that right away. Then, you have to learn at some point. It's better then than now, when I finally got some money together. So. But yeah, it's just, I've always loved the technical trading and the gamesmanship. And being an entrepreneur, you try to determine what people actually want, and kind of you can read things. If you can read things, you can be a great entrepreneur. And I think business people make great stock traders. Um, and I've done it for, over 20 years now.
You bring up a really good point, because I think where most people really take it to the next level is they treat it as a business, right? They get a lot more serious. But let's go back to something that you just mentioned about business people can make good traders, or good investors.
Right.
Talk a little bit more about that. Is it just because they're a little bit more on the cutting edge?
As an entrepreneur, I kind of have done everything in a business. It started from make the websites myself. I know programming, I know this,
Yeah.
and that's
Yeah.
out of necessity because,
Yep.
I mean, now I have some great developers behind me and stuff that I've done other stuff with. So I try to just focus on the bigger picture, but to come up, I had to make my own money. I had to learn everything. And that's kind of like, I applied that to trading, and everybody else should too. You really have to learn everything to see what's going on, and be able to do it yourself, right? I
Yeah.
mean, that's what I teach, what I do, and I give that away right away. I mean, if you come on the championteamtrading.com and see that, you can see everything I do and read it all very, very easy. And you can be me in a second, because my whole goal is to have that team around me. And today I went on the platform, I was going to say something about a trade, and it was already there. So
Oh, nice.
my job's easy now, right? So, I
Yeah.
mean, there's no babysitting. Everyone there is very professional, and there's a lot of great traders on there. It's all business, and we're turning over our edge. That's what
Yep.
we're doing. So when it's working, we're pressing it, and it's like, seasonality in a business or something, right? If you're selling
That's a good way
stuff
to
on the
say it.
holidays and not in the
Yeah.
summer, it's like the sit out power is very important for what I do. Like if I'm buying breakouts, and I wasn't in February, I went to cash, I think on the 23rd or something like that.
Okay.
And I'm like, yeah, I went to Legoland with the kids, So we just, that was a nice relaxing time for me, actually. And, that's the time that's your vacation. It's a surprise vacation for breakout traders, right?
Yep.
You don't set it, it sets you, right? It tells you when to go on vacation. And that's
And
my system. It turns itself off. It's the safest system, because if you roll out and there's no more breakouts to buy, then you don't have to go down with 50% loss or more than that. I mean, I could probably roll out, low single digits and get to cash, coming off equity curve highs, if that happens. So
yeah, no, you're listening to the market. You're
that's right.
letting the market really kind of just push you out at those right times.
Yeah.
Now, one thing about I think also that goes to your strength of being an entrepreneur. You're going to make a lot of mistakes. Talk about just kind of the importance of making mistakes and learning about mistakes, either in the stock market or just
Yeah.
as an entrepreneur.
Well, people have bad habits, right? I mean, it's like everybody wants to do what the best trader does, but it's like, well, same as like, someone that's lifting weights, why can't you have big muscles? Because it's just a lot of work. You have to be at it all the time,
Yep.
and it has to consume you. I mean, people will know that on the platform, I'm talking in the middle of the night, during the day. Whenever I get to it, I'm doing it. This is my pure passion, and I would do it for free. And sometimes we do when we lose the day, but
Right.
overall, we're
Exactly.
doing good. Doing
Yeah.
good.
And so learning from that mistakes. So that was one kind of thing. That was a nice crossover for trading.
Yeah.
Now, another thing, and so going back to the champion team trading that you started, you're not only trying to teach people, but you're trying to collect a lot of people and try to have everyone teach each other about the stories about some companies and things like that,
That's
right?
right. Yeah. So there's a lot of stuff. So it's not a noisy chat room. We have this platform where uh, there's topic areas. So you can have a stock in just one area. And then if I put it up there, I want all the suggestions of all the ideas and all the reasons it might be good or bad. I mean, if I have a bad idea, tell me why it's a bad idea. I want the social signals. I want to look at Google trends. I want to see, is there something we're missing? For the holidays, are the other sales? Is Google showing a little? We got to have some conviction. So
Yeah.
we're building the case besides just the technicals. If I'm going to whack something with a bunch of size, I want there to be a story. But I will just play the technicals too. I mean, if I do a biotech or something like that, because
Mhm.
I'm not a biotech expert, but I'll play the momentum and stuff. but this helps build a full picture, and everyone can see how it's done. That's new to it, to see how we build the case, like building a business, right? You have to say, is there going to be a market for this or whatever?
Yeah.
We're reading all the signals and the signs and the chart, and we go so far with it. I don't know if we have enough time to talk about all, but we want the funds coming behind us. I don't want to be caught with just a bunch of breakout, cowboys like myself, and then there's nothing going on, right?
Yeah.
Then I'm going to be, with the stop. So
Yeah.
we're looking for some stuff I do. I look for a flush. I like to clear the deck. I like to get. I mean, I am like the weakest hand in the game. I'm the swing traders. We're pushed out right away. I'm not saying I'm some bully or something. For the market, I'll come in there, and if the funds want to ride me up, I'm going to catch a ride on that. And
Yeah.
it's just a big game, so it's a lot of fun, and it is a business though.
No, and that's perfect. Yeah, in the end, yeah, you got to go with the elephants. You got to go with the larger trends, or you're
Yeah,
going to find out
they
the
got to
hard
push you
way.
up the hill, right? I mean, they got to get
Exactly.
behind you.
Yes.
That's what I'm
Yep.
looking for, and I'm looking for the signals, and there's a lot of them. Maybe that's for another time, but there's a lot of signals to look for.
Yep. Now, before we end this segment here, Leif, you had an announcement that you wanted
Oh yeah,
to make.
I was
Hopefully,
saving
you
this
remember
for
it.
you. We were talking, so I owe you for coming on the platform. This is great. So Rusha stopped by, so I was going to tell my members and anybody else that wants to join, if you're a member of Champion Team Trading, which is a great community to talk with other traders. There's no opinions. It's all, and we have a moderator. It's very serious stuff. You can add stuff to ideas and all that, and work with great traders that are putting up setups, and then we're working on them for long in advance. There's no audibles here, even though I will say what I'm doing in real time. We're working on this stuff forever, but I'm going to give away a lifetime membership to anyone that is my member throughout 2021 that joins the U.S. Investing Champion that places in the top 10. So as long as I do this, or Champion Team Trading is around, because the whole idea was to surround myself with great traders, and anyone that makes the top 10 and is my member can stay on forever. So that's just a little promo for Rusha here, because
there you go. So the market is in an uptrend, but remember, growth stocks manage your risk. Even though the larger markets are acting better, it's gotten a little bit choppier. So make sure you know where you're going to get out if things start to take a little bit more of a pullback and a little bit more of a break. And speaking of break, let's take a quick break here. But when we return, we are going to talk about some of the other trading lessons that Leif talked about, including the importance of being a risk-first trader. We'll be back. Stock market have you nervous? With the hope for a COVID vaccine and a shifting political landscape, it's virtually impossible to guess what will happen. But with Vantage Point, you don't have to. Visit www.freestockcoaching.com and find out how Vantage Point's AI technology can forecast stock market trends up to 3 days in advance with incredible accuracy. Vantage Point's patented technology analyzes huge quantities of global data in seconds. Stop guessing. Check out www.freestockcoaching.com and experience Vantage Point for free. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Leif Soreide is our guest on Investing with IBD, sponsored by Vantage Point. Okay, Leif, let's get into this concept of being a risk-first trader, and I'll set it up this way. A lot of times, when you're a new trader, you're always thinking about how much money you can make.
right.
If you've survived the markets long enough, you're thinking more like a risk-first trader. So talk about that concept.
Yeah. So, I mean, when I go into a stock, I want to see what risk I have to take. That's why I don't buy something up, 20% on the day with a stop at the low of that day. I mean, I'm going to get wiped out if it turns around on me. We'll have a bad day anyway. But, we're worried about the risk, and I can take a lot bigger position sizes if I have smaller risk. Okay. So one of my big aha moments was talking to Dan Zanger one time, and asked him about a trade. Maybe it was a $60 stock or something like that. And he said, I said, do a dollar stop. I'm like, a dollar stop. So, basically.
That is pretty tight. Yeah.
Yeah. So this is something that I don't know everything. He trades a lot of chart patterns. He's awesome. But, it's just kind of the art behind it is you know, you just feel like what's a successful trade, you know, and if not, it's something you can take a smaller stop and try again even, you know. So yeah, taking the smallest risk with a good size, and then maybe even trying again is something that we want to do. Okay, so that's what I do. So take small risk, and I'm looking for large risk multiples. Okay, so I'm
Okay.
looking to take uh, you know, and you can go broke taking a profit. If you take your profits too quick, you're not going to get anywhere, because, you know, if you're like 50-50 and you're taking one risk multiple and you take it off and losing one, you're treading water, and then eventually you're going to get caught in something bad, and then you're going to be a losing trader. So you want to have these things get out, and you want to sell into large risk multiples. You know, that's what you want to do. So
No, and that is really important. I think a lot of, and that really goes against human nature too. For during the kind of the steps of becoming a better and better trader, you first learn about managing your stop losses, but then really the next step is letting those winners run to enable
right.
those larger risk multiples.
That's right.
So let's talk about another concept that you spoke about in the first segment too, progressive exposure. Walk people through that concept and how you let the market slowly pull you in.
Yeah, one of the biggest questions I get is position sizing, because people think there's some kind of secret to it. They want to know maybe what my position sizing is, and
Yeah.
you know, for all my money when I trade at all, or when I do a contest, you know, contest is obviously, you know, these guys are very highly levered with smaller, more concentrated positions, um, and they're all doing 3% stops, is from what I've heard, the top three,
Okay.
which is
And you're
interesting.
talking about the U.S. investing
Yeah, the
championship.
U.S.
Yep.
The current leaders
Okay.
this year. The secret for you, for the individuals, to have the right position size for them.
Yeah.
If someone does a huge position, maybe you can't do that, because you're not going to be sleeping at night. You're going to be staying up all night wondering about your stocks, and you're going to come in the morning and make a bad decision. You know, you have to, and you have to bet your gains. Like once you have gains, you can bet bigger. Okay, so if I have a great month, I'm more free with it, as long as things still appear to be, you know, shaping up for, you know, breakout success. The breakouts are holding and going higher.
Mhm.
Um, yeah, the position sizing, that's what people have to discover on their own. But progressive exposure is part of that too. It's like your position sizing. If you're coming from cash, you do some testers. Okay, with testers, whatever that is for you, it might not be the same for me. And
That's interesting.
if I give you what I do every time, and I don't do the same thing every time, it's all condition based. It's all profit and loss based. How did I do last time? How many gains do I have? And, you know, how am I feeling about the market? There is an art to it, right? So, you know,
Yep.
I'm a discretionary trader, so my discretion, whatever I want to, you know, basically do. And I'm using my experience in the read of the market and everything I see to determine how to get in and what position size I might start at. But I might start with some pilot buys, is what they're called, half sizes, things like that, to get a feel for it. And I might spread some around, knowing that maybe I have to add to them later or cut them or something. But I want to feel it too, right? So
Mhm.
putting feelers out there, as they say, that's what you're doing. You're getting the feedback from the market. Okay, so you're seeing how they're acting, because now you're tracking it seriously. Like you know, I'm not like a watch list guy so much. I'd rather almost buy the stock and then just cut it if it's wrong, you know, so something like that. So, but I mean, I have thousands of alerts probably at this point. I mean, all the time, the alerts are telling me what's going on in the market. So if I'll go through every stock and set them where I need them to be, so I don't have to watch that stock. And that's probably good advice for
I
people
like
to
that.
not be glued to their screen.
Hmm.
Let the alert bring you into the, you know, to the program and say, okay, check out this stock. It just crossed 100. And, you know, that's where, if that's where you want to look at it, for instance, or lower. A lot of people don't set alerts lower. Sometimes if there's a breakout happening and I'm not really feeling it, it's too short, too choppy. And I use ATR a lot, which is average true range, and I'm actually measuring the height of the bars and the distance in between, because I'm getting
Okay.
them to calm down, which is, you know, a tool that maybe we could talk about. So I know there's a way to measure it, but that's the dollar amount on MarketSmith.
Yeah.
But yeah, so when that comes in, I'm looking for it to come in more. So then I'll set alert lower, and then that way, you know, I'm not ready to buy that breakout. It'll come in and touch it, and then I can set an alert higher.
So you're looking for the stock to pull back, the
Yeah,
volatility to reduce
that's right.
and to calm down, and the average true range to start
That's right. Yeah.
reducing, right?
Right. Right.
And now no, and what's important about that? What's going on during that time?
Well, you want volatility, you want price acceptance. So
Mm-hmm.
this is the key to buying a good breakout. You want people to stop basically arguing over where the price is. Okay, if I
Yep.
say, it's at 110, it's at 100, and then it's at 120, it's back at 90. This is a mess, and that's an argument. It's like two people fighting or something, right?
Yeah.
You want them to make peace. You want to come in there when they're shaking hands, maybe. And I'm just making this up as I go. It's just like
That's good.
something
That's good.
something good that we could use. You come in after an argument, and then they're shaking hands, they're making up, and
Yeah.
then they break out, and everybody's happy. The volatility's out of the room. There's peace, and that's something to think about, right? Like
I
just kind
like
of
that a lot.
visualize that.
Yeah. Yeah, because and that I haven't heard anyone else put it like that, but kind of that argument, because that's what it is. It's a disagreement. You
Right.
are looking for that price agreement. You're looking for the volatility to reduce, and a lot of times you're also looking for a lot of these swing traders or just a lot of retail traders to stop
Yeah.
watching that stock, right?
Exactly. Yeah.
And now once everyone's not watching it, that gives those larger institutions, those elephants,
Right.
the opportunity to slowly keep buying those shares and
And a
not
key,
leave
a key
footprints.
point is like I want swing traders, everyone to throw the towel in
Yeah.
and it not be at a breakout point and they're all cleared. And then when it rises back up, that's not a breakout buyer or someone coming in to raise debt. I mean, that's institutional money usually. And they've accepted it and they bought it all up. So I'll look to get back in after the deck is cleared a lot of times too. But it has to calm down and set up.
So
Uh,
so Leif, let's go over an example of this clearing the deck, really kind of just a shakeout. And when we were talking last week about this, we were looking at Corsair,
right.
and I have still a little bit of this, and I survived that clearing the deck thing. But I'm gonna share the Mark Smith chart here,
Yeah.
and so okay, so this was kind of it was on November 10th, right? November 10th, this kind of massive shakeout, which I think it was on an
Right.
earnings
Yeah.
report. That's your example of a clearing the deck, or an example.
Yeah, and then so I got involved right after that, and then
Okay.
because I could see that everybody was washed out. To me, there's only strong holders left in the name. That's the argument, right? And
Yeah.
they're arguing over the price. Someone bought it up, and that's not a breakout trader. That's I don't know if it hit a moving average. It's different systems might have, but
Right.
that was. I mean, looking back, that had to have been institutional money because look where it went. They were ready to jack that up 76%. My high sale was 50. And then that was I still had about a third of it or a little bit more than that. And then as it was rolling, I got out. So,
Yep. Yep.
so this was,
Um,
this was a good trade.
yeah, yeah, but that is such an important concept. That really took me years to learn that those kind of shakeouts in the market that are
Yeah.
going to happen. You can't avoid them, so you have to learn to kind of accept them and go with them. And if you get
Right.
shaken out, you have to be willing to get back into them too.
Yeah. And this was a
And
high tide flag
yeah,
IPO. And I love trading IPOs and you had the author of the life cycle trade
that's right. Yeah, we
on
both
there.
had Eve and Kathy on. Yep.
Right, right. So yeah, they're great, and that book is awesome, and I love the stats they have. And IPOs, there's a lot of potential on them quickly, but they pump them and dump them too. So
Yeah, that's true
I'm
too.
quick to book them, and it's like Neo this year. I traded that a few times, and they haven't really dumped it yet, but
Yeah.
this happens. So
Yeah, and sometimes they go up a lot further than you can imagine. But
yeah,
I think really getting those concepts down of you're going to get shaken out, accept it. You're going to get stopped out, accept that. You're going to make mistakes, accept it, and then learn to get around those. On that way, you'll be much more fluid. Leif, talk about the losing streaks. It doesn't matter how good a trader you are.
yeah.
You're going to go into losing streaks. How do you handle that?
Well, chop is the worst thing a breakout trader could have. I'd rather be fully rolled out of the market and go to a February crash. That was easy to
Yeah, that's
sidestep.
true. That's
Okay,
funny.
for me,
Yeah,
that was easy to sidestep because I mean that's an easy read. There's no more
right.
breakouts. The bases are failing, and I'm counting losers and losers, and you don't want to buy a virus stock, or I mean, you can, but you don't want to buy the one breakout. Probably, it's just time to. That's your vacation time. It's um, so that yeah, that's the key there.
So the losing streaks, you start noticing that's going to give you some feedback to start
Right,
moving
right,
to the
right.
sidelines, and then that other important concept, sitting on your hands, which is so hard for a lot of
Yeah.
people to do.
Right, right. So the art to it is actually reading your profit and loss, and you kind of know what you're worth after a while. I know what I can do in a good month, in a sideways month, and in this situation, you start to figure it out. But if you're getting this feedback and you keep trying it, and you're having losses or just churning, it's maybe time to kind of take your position sizing down a little bit, be more cash, and as things work, progressively get more exposure and roll up your risk and move your stops up, take some profits. um, yeah, so I mean that's what I do all day basically.
No, and that's for, especially for swing traders, that's really the way to kind of be sensitive in the market and be fluid, so you can kind of go with the flow
Right.
both ways, right? And so you're really truly listening to the market, and I think
Oh yeah.
that's one thing that we can't emphasize enough here. Thinking risk first is definitely one of the keys that you want to get down if your goals are to become a successful investor, and maybe even a champion investor. Coming up next, Leif and I are going to talk about a few ideas. Stay tuned. Tired of reading about other people getting rich in the stock market? Today is your day. Vantage Point's artificial intelligence has predicted countless market reversals, helping traders weather any storm up to 3 days in advance. Visit www.freestockcoaching.com and find out how their AI automatically recognizes global market patterns well ahead of the news to help you pick the best trade. Go to www.freestockcoaching.com to join a free live training session today. Don't delay, save your seat now. We are back with Leif Soreide on Investing with IBD, sponsored by Vantage Point. Okay, Leif, let's go into a few ideas here. And the first one we're going to talk about is NIO, and a Chinese electric vehicle company. And talk about this stock and what you liked about it, and what if you were in or whatever. Talk about whatever you want on it.
Well, I'm not in anymore, but it had a couple good setups. This year I traded it at least twice. I have two buy points. A little bit of a mess. There's a lot of sales on it and stuff. I guess you could pull up 824. I think was a buy point, and
Okay, nice over there. Okay,
1029. Yeah.
very nice. Yeah.
So yeah, that's that big IPO base, and it came out, and it's
Yep.
this electric car technology, and so we're just playing the pattern, and we're doing this over and over again, and you never know it's going to go this far, but when you trade it out of there, sell into strength, and I mean, and you see how this kind of does that sideways drift down and to the right. I mean, that's just that real price acceptance over and over again as it goes up the scale there. It just made me like this more and more every time it's set up. I mean, if every stock did this, I mean, that would be it. I mean, everybody would be
That'd be amazing.
making tons of money. That would be great. We have to request this or something. But this was awesome, and we do this over and over again. I think it set a high tight flag at some point, but yeah, I mean, it's just that power. And it's setting up again. Maybe it needs a bigger base up here though, but
Right.
I'm not buying it up here, but just and people might say, oh, you could have held longer, and yeah, I could have, but sometimes it's I sell into strength when I can, and then I use that to pay for other risk, and then try to get other names to do the same. So yeah, that's what I do, and I'll trade this as much as I can, but I'm gonna probably get on and off of it quite a bit.
No, and you just nailed a number of really important concepts there. Being willing, first selling the strength,
Right.
taking the profits, being happy with that. A
Right.
lot of people, they'll dwell, oh, I could have made so much money. That's hindsight. And that's not reality. You when you have the opportunity to lock in a really good gains, you should start locking in. You don't have to be all in. Now, let me ask you this: Are you when you sell, are you just slowly scaling out, or are you just like you're taking all selling all of it at that point?
No, I'm looking for multiples of my risk. Say I bet $1, I wouldn't consider selling it anything before it gets out, twice my risk or 5 times my risk.
Okay.
Even high tide flags, it's going to be 20% or more typically. But I have to read everything too, and there's I'm not a robot, right? I mean, that's the thing. When you get ambushed with funny looking bars on the chart and big down days, and you have to read what you're doing.
Yeah.
And things roll over like the CRSR. I wish I sold the whole boat at 50, and then it
Right.
just kind of rolled over. It's going to need to reset, but I would attack that one again if it did. So that's important, to not have an opinion on the stock and just let it present itself to you and have that mindset.
No, it's perfect. Perfect. Let's go to the second stock, and this is Unity Software. I have some shares of it still in this stock, but what did you like about this, and where were you? Where was it coming up on your radar?
Yeah, I mean, coming out of that base, it got a little bit wedged up, but
Yeah.
where did I buy this? I bought this on November 20th. I don't know if you can do the crosshair.
Yeah. So yeah, that's right. Yeah. Yeah.
Yeah.
That was an interesting buy, but man, did it ever work right when you got in it?
So I sold half, basically at yesterday,
Okay.
which was the December 1st, and then I
Yep.
sold. Well, I took it down to half then, and I sold some on 11/27. So I have half a position left, and we bet. I think I bet under $3 was my stop, and that way I could take a really large position on this. And so where did it go from 122 up to 155 or so? That's where we're selling. So
In like what, a week and a half?
yeah, and then that's compounding your gains quickly, right?
Yep.
So when you take off half your money at many multiples of your risk, then I can finance some other trades, and you can have a huge position with a $3 stop, and that's getting it right. I mean, that's hard to do, and there was a lot of reasons why that was a tough buy, and you're not going to make. I always say you're not going to make 70% probably if it's an easy buy.
Yes.
That's my thing. I always say, I want a lot of people to argue with me, and sometimes that's even my signal. Because that's the argument. No one's really sure. Oh, then and then people have to chase it up, and that's mostly funds because they're not finished buying it as an IPO. So we're trying to catch them in the need and the thirst for the demand for the shares and buy lower than them. So
Yep.
even though that was an extended position, but it was just it just came out there, and on this chart, maybe a 60-minute chart at that time frame would make more sense. I mean, you can't really see it here. I don't know. Now we're way beyond it, but yeah.
Yeah. Well, 11:20,
Right.
right? So right. Yeah. I mean, you can clearly see it.
So you can see this little cup and this handle, and
Yeah.
it came out.
Yeah.
I mean, that's how you can get that stop. So
Yeah.
I mean, we're dialing in at the buy point. We're looking at the big picture, like you have the weeklies and the dailies, but I will come in and definitely dial it in, and then I'll read the volume at the breakout and going into that. And I can only guess too, right? I mean, you could easily be wrong, but we're using all the edges, and I have many people telling me now, a lot of the edges. So it's a great thing to have behind you, to have these my teammates on this site. So
No, that's excellent. Let's go to the third stock, and this is Snapchat, and I have shares of this too. And
right.
where did this one come up on your radar?
So maybe you want to go to this. Well, this is a high tide flag, and mostly what I'm showing you are all high tide flags.
Yep.
Okay, so and people are probably like, oh, this guy's completely nuts. All he trades is like the sticks of dynamite, more or less. But to me, I'm using the same risk as you would do, and we say no blue chips allowed on champion trading, because we want to be used to playing with a dynamite, right? This is the thing. So, this is a high tide flag, but it's a common name, so maybe people don't think of it like that. But yeah, it's set up, and I mean, it was just, you probably have to dial in on the 60-minute again.
Okay. Yep.
But I'm playing this. There's a slight downtrend there from that high. If you go to the right there a little bit, the next high. Yeah. So from here, there's a diagonal, right? And then there's some volume started coming in there. And then it broke a downtrend, and then it broke a pivot. So I'm using everything that I know everyone's looking at, and I'm using the confluence of different systems too.
Yep.
They're only edges though. So diagonals, and high tight flags, they're valid entries for my system. And someone said, why didn't you buy the diagonal? I actually bought it, slightly higher, because I looked for the confirmation of slip in the previous high in the pivot.
Okay.
But yeah, I mean, I just had a good feeling this was going to come out. The risk reward was good. And it's a high tight flag, and it's a quality type of setup, quality name. So we want to be in that.
Yeah, no, and going back to you talking about trading dynamite, high tight
Yeah.
flags, there is something. I mean, there's a lot to really focusing on one pattern because you're going to
Right.
develop an unbelievable expertise on that one pattern, and you'll probably end up trading better. It's kind of like figuring out just what system you want to focus on, and just focus everything on that. Don't jump to options, don't jump to value, don't jump to breakout trading. Pick one, focus on it, and spend many years so you get a real expertise on it.
Don't be a system jumper. This is what I say.
I like that.
That's a big key. And I'm risking the same amount of money here that you would risk on Walmart. There's maybe a little more gap risk and stuff like that, but if it goes to my stop, the percentages can be the same, if not smaller. I mean, when it gets out, this can really get moving. I mean, maybe I even have a hard time reading a stock like Walmart if it gets out slow and all that.
Yeah,
When you get used to playing with this stuff, you know what you're looking for, right? So I stay with this. This is one of my favorite patterns, and we have other patterns from this that are on the platform. We have something called a rocket base, which comes from a failed high tight flag, and that works pretty well too, because we don't want to turn our back on this kind of power. So
yep.
I do have some other rules for ways this can set up again. If it fails and over time starts setting up again.
Perfect. And if you want to, because we've gone through a lot of charts here, when if you're listening to this in your car, when you're at home, go to investors.com/podcast, and then you can take a look at a number of these charts and what Leif is talking about. Let's go to a couple more stocks, Leif. We have SRRK, the ticker symbol, Scholar Rock Holding. You want to talk
Right.
about a high tight flag? Here you go.
Yeah, so this was something I bought. When did I buy this? The other day, coming just as the high, and it was a little wedged up.
Oh, yes.
Just a 52-week high. Just if you draw a line across
That's
the top.
interesting. Yep.
And then usually, my members will say, "Well, isn't that wedged up?" Because they know I say this, and I say yes, but this shakeout caught everyone off guard, and there's someone.
The shakeout down at 37.
Yeah,
30, right?
there's some kind of price acceptance here with this level. And I don't know what it is. I'm assuming there's institutions buying there. I don't know that too many breakout traders will buy this. I mean, there's some inside days, and then they buy this slip up and the undercut and rip and everything everyone's playing.
Mm-hmm.
But a valid buy in a high tight flag is also just a new high with a stop. And the stop doesn't have to be huge, but you need a little bit of room because the pivot is kind of lacking there because it just went straight up. So.
Perfect. Okay, so that's Scholar Rock Holding, and one more, and this is the ticker symbol is REZI, and
Right.
how do you pronounce it?
Residio, I guess. I mean, I'm not 100% sure.
Yeah. We'll go to Residio. I like that.
Yeah. So, I mean, this comes from, if you do the weekly, there's going to be some overhead supply back there, but it's not on this chart. So that means it's over a year, I suppose.
Yeah.
But this made the turn for some kind of residential environmental systems and air purification after COVID and stuff.
Okay.
And
okay.
I just put 2 of these commercial systems in my house. I don't know if it was this brand, but I had to wait for like a month to get it or something like that. One for each air handler. So there's a story there. People are switching to this kind of stuff, especially maybe for schools and things.
Yep.
So, look, I mean, there's a huge washout, and there's, it's an IPO kind of turn there, and you could have the authors come on, tell me about which one this is. We always argue about which one's which. I'll let them figure it out. But yeah, this is coming back, and it set the high tight flag, and it does have the strike of the overhead supply against it, but you're looking at an inverse cup and handle, right?
Yeah.
Or head and
inverse
head and shoulders.
Head and shoulders.
Yeah. Sorry, inverse head and shoulders with the that little shoulder there, the shakeout, the high tight flag right off of that. So
yeah,
you're looking good. So you got the biggest volume day there, volume week there. So yeah, they're arguing over the price. But if this gets out, it would be good risk reward trade. It's something like I recently bought a Land's End, and that's going into earnings, and I'm up on that a little bit. So it's the same type of thing. You have to know what you're playing. It's a little bit of a shakeout of everyone, and then it's a high tight flag. But there's some supply back there,
Yep.
and we looked into a lot of things about the company and stuff, and so far so good. If you look at the daily, you could probably see the flag develop there a little bit.
Yeah, no, this was, and
Right.
you posted this on Twitter,
Yeah.
right?
I basically posted that live just to embarrass myself if I was wrong, right? I mean, you go, oh, hey, look, I bought Land's End, and then instant stop probably. This it happened to go up 10% in a few minutes, and I sold 25% and moved the stop. I'm not saying where because you guys are going to stop me.
That's funny.
But I moved the stop a little closer. Yeah. So, and you guys can't see at the gym. Arusha said a lot of people are at the gym when you're listening to this. So let's turn those treadmills up.
Yeah, exactly. When they used to have gyms open, not anymore.
Oh yeah, that's right. Well, when you're on your treadmill, raise up. Let's go. Come on, another mile or something.
That's funny. Okay, so those are a few ideas that are worth considering for today and this week, adding to your watch list. Hey, thanks, Leif, for joining us today.
Hey, thanks for having me. Anytime, Marush. It was an honor. It was a lot of fun, and thanks for coming on the platform and checking that out too. Appreciate it.
Definitely. Thank you. So next week, we are going to have Ross Haber on the show. Ross is a former portfolio manager of William O'Neill and also one of the co-founders of TraderLine. So that's it for this week on Investing with IBD. I'm Marush Japiris, and thanks for listening.
And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.